Hey everybody, this is Lance from thetatraderz.com. This video I'm going to go over a trend following strategy. It involves buying a triple leveraged UPRO, which is the triple leveraged SPY, or TQQQ, which is the triple leveraged QQQs. And you're going to buy it in a mechanical and methodical basis. I'm going to show you some of the back testing doing this video today because we actually hit the parameters to do that. So stay tuned to see how to do the strategy. Very easy to implement. And let's get right to it. Right, so I wrote a blog post based on this. This is going to be a trend following strategy with UPRO or TQQQ. You could use either one of them. You could even use both at a certain percentage if you'd like to be a little bit more diversified. So what we're going to do is look at the 200-day simple moving average, and we're going to be using this on the SPY. This will be a trend indicator to determine if you should be getting into the triple levers or not. So when SPY is above the 200-day simple moving average, we're going to allocate to UPRO or TQQQ, and the goal is to capitalize on bullish trends, as you'll see in the charts. Typically when we cross over the 200 simple moving average on SPY, we get a pretty good bullish trend here. So we're going to try to take advantage of that with the 3x leverage. Some of the back tests, the strategy with just UPRO has, let's see, 0.7% with UPRO. With the filter on, we were getting a 36% compound annual growth rate. And then if you add in T-bills when we go below the 200-day, it does lower to 32%, but the max drawdown is 15%. And this is comparable to just buy and hold UPRO and never touch it. You'd be at a 27% annual growth rate from 2011 to 2023. But that 80% drawdown is what is pretty damaging. So we want to get out of the trade whenever we cross below the 200 EMA, SMA, simple moving average. TQQ is pretty similar. Buy and hold 40%. With the filter on, went up to 45% in the last 12 years. And then if you add T-bills into the mix when we draw below the 200 SMA, it does go down to 38%, but the drawdown is much lower at 20% instead of 85% with just buy and hold. So rationale, 200-day simple moving average, widely recognized indicator for long-term market trends, and you want to stay invested during the uptrends, exit during the downtrends. This does amplify gains and losses though, so if you are in any of the triple leverage funds, even if we're above the 200 simple moving average, it could still draw down a bit. However, we'd be getting out of the trade completely and then going to T-bills once it crosses below the 200 simple moving average. So that's not to say there's no drawdowns. If we're way above the 200 SMA, it could still drop a bit to get below it at one point. And then capital preservation, allocating to T-bills during the downtrends ensures capital is preserved, and you can earn a modest return. Right now, T-bills are paying about 4%. You could buy ticker symbol BIL or SGOV. And then there is some considerations to think about. It could cross above and below frequently, so you might be getting in and out relatively frequently, just FYI on that. There are tax implications. I am doing this in a Roth IRA account, so you could get in and out without any tax implications. But if you're doing this in a brokerage account, you would have some short-term capital gains in many cases. And the levers decay. They do decay over time. However, with the triple leverage, it usually offsets in a long-term trend. So this is SPY today on a really big up move with Trump tariffs being 90-day hold with US and China. We had a huge update today. Market closed at 581 when the Friday before closed at 566. This blue line is the 200 simple moving average on SPY. And then right here, we're going to close T-bills if you're in it, buy UPRO or TQQQ when we crossed above it. Previously, when we were above the 200 simple moving average, right here, it crossed below it, In that case, you're going to close the UPRO or TQQQ and stay in T-bills until we crossed above it again. Now, if you look at more of a long-term trend, if you look at 2024, we were above the 200 SMA for a long time here. Let's move the chart down a bit. So all the way to November 2023, up until March of this year, we were in this bull run where we're above the 200 simple moving average. If you just look at UPRO at that time, UPRO also took very dramatic gains, went from 42 up to 83 in about a year and a half. You would have doubled your money in that time frame. So it could be a very good strategy. However, there are times where it will drop. So for instance, right here, we're at 85. It dropped down to 63. And this is while SPY was in the above the 200 SMA. So you would have stayed in at this point. Just be aware that if the SPY doesn't cross below the 200 SMA, you're going to stay in the trade until then. So I would recommend a very small percent of your total account doing this. I'm going to test it out with $1,000, and I actually bought the UPRO today, $1,000 worth. And I will be getting out whenever we're below the SMA. So if you found this video helpful, click a like, subscribe, share, all that good stuff. Helps out the channel. Appreciate all your support, and I'll see you guys on the next one.